Welcome back to the Canadian Real Estate Channel. And today I'm here with Saman Habibi, where we're going to be covering the Durham Region market update. What's going on in Durham?
A lot happening in the Durham region. The main message here is new listings. So as you can see, our new listings month over month have increased by 21%. Let's talk about investors. So the Durham region has been a very popular spot for investors to come. I want to talk about duplexes, multifamily properties. What are they selling for, and what are rental rates that people can expect? So we're going to talk about hot off the press. We've had some news come out from the provincial government. They came out and they announced the Cutting Red Tape to Build More Homes Act 2024. Try saying that 10 times. Nonetheless, they've got some things that they're bringing to the market. And Adam, let's talk about this. So
Welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host, and today I'm here with Saman Habibi, where we're going to be covering the Durham Region market update. I'm so excited to have you here, Saman. What's going on in Durham?
Thanks, Adam. Happy to be back again. A lot happening in the Durham region. Numbers are not necessarily moving up and down, but we still need to know what's happening with the market.
Yeah, fair enough. I know we just did the market update video on the stats. So if you guys missed out on the video on the stats, feel free to jump back and actually see the whole update video for April. But I'm really excited to see sort of the so what portion of those numbers and what we've got today. I know you've got some exciting stuff for us.
Yes, absolutely. So let's jump right into it. So today we're going to do a market overview. I'll tell you what's going on by each municipality. The Durham region is a pretty large area. We start out west in Pickering, go all the way to Clarington, and we've got 2-3 municipalities in between. We're going to talk about investor data. We're also going to be talking about what's happening in the news at the federal and provincial level that can have an impact on real estate prices here. And we're going to just, high level go over why Durham region for anyone that's looking to move here, whether it be their principal residence or for investors looking to come here. All right, so let's get into the numbers, guys. So we're going to be talking about what happened from February to March 2024. The main message here is new listings. So as you can see, our new listings month over month have increased by 21%. I think this has to mainly do with the spring market, but also the high interest environment where, people at this point have now held on to their high interest mortgages for 12 to 18 months now, and you're really starting to see that pinch. We always had that narrative that interest rates were going to start cutting beginning of 2024. And now, we are at the beginning of 2024. Nothing has happened. There is news that perhaps in June, these rates are going to get cut. But, we always hear this news that the cut is going to happen. They allow us to foreshadow when this is going to happen, and nothing really happens. So I think this is one of the reasons why inventory and new listings are increasing. And that, as a result, has kept prices fairly stable. Okay, so from 870,000 to 869,000, not a big fluctuation in prices. Someone may look at this and say, well, nothing's going on with prices. Is this good? Is this bad? And I think it really depends on where you stand. Are you a buyer or are you a seller? If you're a buyer in this market, this tells me that there isn't a lot of volatility. So if you're looking to purchase, you don't need to speculate with what's going to happen in the next month or so, because prices may stay at this point. But if you're a seller and you've purchased something in the last 12 months that you need to, sell, then this perhaps doesn't work in your favor. So it really depends on your personal scenario, okay? Months of inventory, 1.6 months of inventory was still the lowest in the Durham region. When you take a look at Peel, York, GTA, Hamilton, we're still the lowest in terms of months of inventory. And this metric is important for anyone that's looking to sell their property, because this is going to tell you what kind of strategy that you and your agent should take on when it's time to list your property. And 1.6 would put you at a seller's market, which means that you as a seller, if you do things properly, will have the ability to essentially be in the driver's seat when it comes to selling your property. And of course, it's not just price. There's a whole strategy behind it. But if everything is done right, you have as a seller do have the leverage to essentially drive the listing in any direction that you like, okay? Days on market has also decreased. This has to do with how properties are being priced right now. So days on market and the sales price to list price ratio, that number right underneath it, those go hand in hand. So if I talk about sales price to list price ratio of 103%, that tells us that most listings right now are listed below market value, and they're actually selling more than 100% of list price, okay? Which then goes to show us that these properties are not sitting on the market for long enough. And as a result, that days on market calculator starts to drop. Okay, so those numbers go hand in hand, and it's, you know, it's following the trends as it should at this moment.
Nice. That's great insight there too, as well. Just to understand, like, what's the level of demand in the market? How long, if you're listing, should you expect to sit on the market? And about what price, if you're the buyer, right, should you be offering at? Like, this is it's a competitive market, but it's not as like, it's not like what we've seen in the past where you're going to offer 10% or 20% more than the list.
Yeah, exactly. Yeah. And it's, you know, when I look at the trends, we're for the last 3-4 months, we've been around 100 to 104%. So again, not a lot of fluctuation. So if you're a buyer, there's not a lot of fluctuations. There's not a lot of guesswork. You know, right now numbers are where they are. If we compare it to the last year, we have kind of bottomed out right now. Prices aren't really moving up or down too much. So it does provide some guidance and some comfort for buyers. But again, like I said, if you're a seller, then, you know, your situation may perhaps be different. Okay, so let's dive into these numbers a little bit more. This next slide is supposed to kind of answer that supply and demand scenario that's very relevant in real estate. And we're going to be talking about February to March 2024. So as we discussed new listings, we know that new listings are up around 20%. So that is, as I discussed at the on one of the first videos, this has to do with the spring market and also higher interest rate environments coming to market. But if we also take a look at the sales data, the demand is still high, and the new supply that is coming to market is getting absorbed as well here. Okay, so the sales are up, sales volumes are also up 15% month over month, which tells us that anything that's coming to market is getting absorbed and that demand is still high. We know that demand right now is being driven by first-time homebuyers quite a bit. And being in the Durham region, where we have quite a bit of inventory and listings under that $1 million threshold, it's very relevant. This region is very relevant to first-time homebuyers. And in fact, you know, that is who the first-time homebuyers are taking up a lot of the inventory that is coming to market at the moment.
That's great.
And in terms of median price, you know, this chart is supposed to essentially show you that there hasn't been a lot of fluctuation in price. If we take a look at month over month, we already discussed that. Month over month, prices have not changed a lot. This has to do with the higher supply, the higher interest rate environment, and as a result, prices have remained fairly stable. And if we take a look at year over year, we're in fact down just a little bit. So we're down by just 0.7% year over year. Again, not that big of a fluctuation for anyone to be losing sleep over or wondering if I should wait or if I should get into the market. Prices right now have been very stable for the last 12 months. So let's talk about what's happening throughout the municipality. As I said, the Durham region is a fairly large area. We have Ajax, Brock, Clarington, Oshawa, Pickering, Scugog, Uxbridge, Whitby. Most of the outlier numbers that you see here, for example, Scugog and Uxbridge, month over month, Scugog is down 9% and Uxbridge is up 12.4%. Those are two areas where I would say you can't look at median price necessarily. It's a very interesting area where there are, you know, for example, in Uxbridge, you could be in a neighborhood where the median price is, you know, $900,000, and then you can be in the Windance community where the average sale price is $2 million, and it's a private neighborhood. So the type of homes really cause these fluctuations to happen in Scugog, Uxbridge, and even in Brock. But if we take a look at the rest of the municipality, you know, we have single-digit ups or downs, and it's been fairly stable and fairly healthy here. And if there are any big fluctuations, for example, like Clarington at 5%, there are outliers there as well. So just something to be mindful of. So if we take a look at another thing that I want to talk about here from a municipality perspective is, let's take a look at the far right, okay? Let's talk about peak of February 2022 versus, that's supposed to say March of 2024. As you can see, prices have corrected quite a bit here. So the Durham region is down around 26% versus the peak of the market, which, is a good sign if you're a buyer. I talked about this point in the last presentation, but I'll talk about it again. Prices have corrected and prices have not really changed materially over the last 12 months. So, if you're a buyer and you're looking for best bang for buck, I would say that Durham region is definitely an area for you to focus on.
Yeah, it's useful to understand as well too that CMHC just forecasted a 20% increase in price over the next 2 years, right? And that was kind of across the board, which is, it is interesting, right? Like they're feeling bullish, and it looks like having this type of predictability really indicates for a buyer or an investor that kind of what to expect, and it's really going to come down to how can you buy? Like, can you get a good buy? Can you get the right price or the right terms that allow you to make sense of an investing strategy there?
Yeah, you're right. CMHC is making announcements. The federal, provincial government are making announcements, and we'll definitely talk about those in the coming slides. But yeah, I think that the message I'm getting here is that they want to, show confidence. They're doing a couple of things. They're saying that rate cuts are coming. Tiff Macklin, for the first time, when he was asked the question of, are rate cuts happening or likely to happen in January? And I think for the first time, he actually used the word yes, versus trying to deflect it. So I feel like the message they're putting out there is a positive one, and perhaps there are things coming in the pipeline that we're not aware of. So time is going to tell. So let's talk about investors. So the Durham region has been a very popular spot for investors to come. What I want to do here is I want to talk about duplexes, multifamily properties. What are they selling for, and what are rental rates that people can expect? So the average price for a duplex here in the Durham region is around $850,000 to $910,000. There are duplexes on the lower end, even lower than 850, and there are duplexes, higher than 910. It's a very dependent location as you get closer to the Toronto area. So, for example, Pickering, the 910 would probably be 970, 980, and as you go further east, you're probably in the 800 to 850 range. So there is a bit of a deviation on both sides of the equation here, but nonetheless, those are fairly realistic prices based on the last 30 days of sold data. On the multifamily side, there have also been some transactions. There's been 4 units, 6, 12, and 18 unit sales as well, and the average selling price per unit is around $270,000 to $300,000. Okay, so I would say that the multifamilies, we are seeing more and more of those coming to market. And when I take a look at the sales history, it's typically owners who have had them for a very long time, 20, 30 years. There's probably some deferred maintenance on these properties, but nonetheless, you can tell that these owners are getting older, getting towards closer to retirement, and these properties are coming to market, and they're in fact selling, and they're doing fairly well. So once you go ahead and you purchase these properties, duplex, multifamily, what kind of rent can you expect? I'll just go over this very quickly. On a single family home, if you have a typical bungalow and it's a single family, you're around $2,700 to $3,000 a month, plus utilities and hydro. If you have an executive home, so let's say you have a detached 2-story that's nicely done, it's around $4,000 to $5,000 a month. And there is in fact a pretty good demand for these executive homes, because there are a lot of projects happening in the Durham region, whether it be OPG, whether it be the nuclear plant. They're doing a lot of refurbishments. They're doing a lot of maintenance on these at these businesses, and there's a lot of execs coming in from over town. I recently placed a tenant into an executive home at $5,000 a month, and that rent was coming directly from the company, so it's very secured. And these are large companies as well, so the risk of non-rent collection is fairly low there. Let's talk about the legal 2 units. The legal 2 units, your uppers are around $2,300 to $2,500, and your lowers are anywhere from $1,400 to $2,000 a month, plus utilities and hydro. And I'd say that the tenant profile is still pretty good. You have single people, you have single professionals, you have the tenant profile is very good here, and the demand is still very high. Every time we put something on the market, we utilize everything from Facebook Marketplace to Kijiji to MLS, and we're often getting applicants in the 20 to 30 range, even higher. And it's up to us to kind of do the due diligence to weed them out, but the demand is still very high. And lastly, on the multifamily side, your 1 bedrooms are 1,100 to 1,400, 2 bedrooms are 14 to 18, and 3 bedrooms are 1,800 to 2,200. I'd say that the multifamilies with 3 bedrooms are fairly limited. You mainly have multis with 2 bedrooms, and those are pretty healthy at 14 to 1,800. And again, that's plus utilities and hydro. And if you have parking spots, those are in addition to as well.
Yeah, wow, fantastic rents. Like those are really strong rents across the board.
And another thing I'll say about rents is that these rents have been very stable and have not fluctuated since 2021. And they're not necessarily going up, but they're not coming down either. So for people who are looking to do their analysis, it's safe to assume that these rents will continue going forward, especially since we have a housing shortage as well.
Excellent. Thank you.
So why the Durham region? I spoke about this in the previous presentation as well, but high level, I'll go through this, and I'd maybe encourage everyone to, if they like, pause here and watch this. But essentially, I've listed the 5 main municipalities here: Pickering, Ajax, Whitby, Oshawa, Clarington, and I go through. Can you build a garden suite here? And the answer is yes for all of them. I'll take you to Ajax, where at Ajax you can build 4 units with right of way. Are there any short-term regulations here? Most municipalities are no, which is good for anyone that's looking to get into the short-term rental business and is looking to even get into the short-term rental arbitrage business. Is there rent stability? Yes, we just went through the rental data and we know that rents are not moving up or down too much. And the last 2 factors, population growth and employment growth, those are very important because those eventually lead to price appreciation. And I've gone through all the towns that, for population and employment growth, and it's yes, yes, yes everywhere, which all along, summarizes that Durham region still has the ability to attract good investment and also to have appreciation. The appreciation may not be in the next year or 2, but long term, there's definitely a business case for you to be in the Durham region.
Yeah, that's a fantastic way of laying that out. Thank you, Saman. That's very useful for everybody here.
Absolutely, absolutely. Again, we spoke about this on the last presentation, but these are some of the big employers in the Durham region. Durham region was known to be a manufacturing town, but in fact, manufacturing now only accounts for 8% of it, 8% of the economy. The economy is very diverse with healthcare, education, manufacturing, and even, you have some food brands as well who are doing manufacturing and distribution out of here as well. So for anyone that's looking to look into these companies, by all means, you take a look at them online and you can see the level of employment that they're bringing to the Durham region. And if you're an investor, what are the benefits of working with us here at the DR Group? So the DR Group stands for the Durham Region Real Estate Group. We use that brand because we're all local and we operate out of the Durham region. So when you work with us, you get access to our list of 40 trusted tradespeople. These are tradespeople that you can call and say, Saman referred me to you, and you will be able to, get great service from them. I've used these people at my own properties, refer them out to our existing clients, and happy to definitely share these with anyone that works with us. In-house CPA, so property analysis and tax advice, that's where I come in as a CPA, help our clients really understand what they're getting into. From a tax perspective, what does this mean on a monthly basis, on an annual basis? What does this mean for how do we keep track of your cost base? So try and give as much advice as possible. In-house legal guidance with LTB related matters. So if you ever run into issues where you have tenants not paying and you need to hire a paralegal or legal counsel to help you with that, we have that in-house that we can help you with. When you work with us and you purchase with us, we do the tenant screening and placement for you at free of charge. And we also have a referral for a trusted property manager who will manage your property. So we don't manage the properties for our clients on a month-to-month basis, but we do have a very good relationship with a property manager that we use, and we definitely make that referral. And we do annual property valuations and letters of opinion. So whether it's time to get an appraisal or life events happen and you need a letter of opinion on your property, that's all included within our services as well.
Saman, that's really crazy because I don't know if people really realize, but even just the tenant screening and placement, like that can cost you up to a month or more of rent, right? When you actually go to do that by contracting somebody to do it. So that's really fantastic value you guys are providing. Not to mention the CPA and in-house legal counsel and everything. Like that's amazing, man.
Yeah, there's a lot of, we feel that we the value proposition that we have, Some people may charge you a month's rent to do your tenant screening and placement. For us, it's a very small, it's a very small gain. Whereas if we can kind of build that into the services we provide, we hope for that referral business, and that's all we're going for here. So we're not really concerned about, half a month's of rent. We're more so concerned about building that relationship, nurturing it and hoping for future business. So we're very transparent with that process as well. We let people know that, we hope that the work we do, you can see the value in it. And when it's time for your next transaction, we hope that you give us an opportunity and interview us. We never tell people that we expect you to work for us. All we ask for is an interview, a sit down, interview us, and interview other people too. And you'll see where the value comes from.
That's fantastic.
So at this point, if anyone has any questions about their own properties, or if you have a personal scenario that you'd like to talk about, feel free to take out your phone, scan the QR code, and you can set up a quick call with me, and we'll definitely talk about your personal scenario. No strings attached. If you want to book into my calendar, go right ahead. We're going to move on. We're going to talk about hot off the press. So today is April, I believe it's April 11th today. And we've had some news come out from the provincial government. Here's our friend, Mr. Doug Ford. My friends, we're going to be talking about what's going on here. So they came out and they announced the Cutting Red Tape to Build More Homes Act 2024. Try saying that 10 times. Nonetheless, they've got some things that they're bringing to the market. And Adam, let's talk about this. So what they like to do is they like to give home buyers and builders to decide on the amount of parking space. So what this means to me is that instead of the municipality saying you need 3 parking spots or 4 parking spots to have a duplex with a garden suite, they're allowing home buyers and builders to come up with this decision. Whether it's good for your tenants or not, it's up to you. Do you think that this will have a good impact or a bad impact on real estate right now?
So from my perspective, this can add density. Like you could build or add units where you otherwise couldn't have, which is it's a very large value add to investors. And I've been on the side of wanting to consume that space, but having been regulated by how much parking was required. Now, that's my perspective. On the other hand, having parking does kind of tell you a little bit about the quality of tenant in some cases. And so it'll be interesting to see what social changes come out of that. Some neighborhoods, I'm sure there's going to be some of those not in my backyard type people who are like, well, wait a minute, what are these people doing? How are they getting to work, et cetera? And so I think there's going to be a reliance as well on public transportation or other infrastructure to support that. But from my perspective, anywhere you can add more density is probably useful at this point. And that's one of the ways.
Great points. Great. The other point I'll add is that, there are some properties where the property line doesn't necessarily, end where you would think it ends. So, you have a property where the driveway is long enough to fit perhaps 2 cars tandem, but that, water shutoff is right at the end of the first car, for say. But in fact, when you look at it, you say, I can definitely park 2 cars here. So, I look at this and I say, in those scenarios where your land can actually hold the parking space, but by technicality, it's not your property, I like it for that reason. But yeah, to your point, let's say you have 3 units and each unit has 2 cars, 6 cars in total. As an investor or as a neighbor, do I want 6 cars parked right next to me? I don't know. Some people do, some people care, some people don't care. But do I think that it's going to make things a bit easier? Yes. Are municipalities going to enforce this? I guess they have to if this act passes. But still, I think to me it shows that the provincial government is trying to do everything they can to go out there and encourage more building to happen.
Yeah, and I mean any progress in that space is probably welcome, right? We've been talking about housing crisis for how many years now? It's really been a while since we've been having this discussion. And I think that any progress is just that, it's progress, right?
Yeah. Yeah, I agree. I agree. Next one, ready to go housing projects with the new use it or lose it process to address stalled developments. So I think this is going to essentially tackle developers who have land, who are just waiting and waiting and waiting to go ahead and build. They're saying if you have the land, if you have drawings in place, you have to go out there and you have to start building. I would say this is probably a good thing. We know that a lot of builders are trying to hedge against inflation and hold units or pieces of land that they're not building until prices rise, which, again, depends on which side of the spectrum you're on. If you're a developer, you're probably saying, why do I need to do this? It's my land. I decide what to do. But if you're looking to add housing, use it right now. If it's ready to go, start building.
Yeah, I mean, that's a fascinating take. Like, I do believe, based on like sort of my economics background, like it is tough anytime you put in any type of price controls or you do any type of regulatory behavior like that, it changes where the actual market price is going to be. And so
Mhm.
like it's just kind of fascinating, right? Like that's inherently a regulatory thing that will change how builders behave, right? And
Yes.
so you have to I guess, kind of have an idea what their behavior is going to be after that change. And honestly, I'm not in the position. I don't even know what that type
Yeah.
of change means for a builder, but certainly it will change their behavior.
Yeah. Yeah. Limiting third-party appeals to the Ontario Land Tribunal, effectively taking direct aim at NIMBYism. We know that this has been a big problem. Neighbors complaining about what kind of projects are happening or how many people are living in units. So I guess they're going to be limiting third-party appeals. And any takes on this? I think this is like one of my least favorite ones to talk about.
Yeah, I don't know. I mean, like it is what it is. It's funny. I already
Yeah.
brought up the NIMBYs, the not in my
Yes.
backyard people,
Yeah.
because I didn't see that there. But yeah,
Yeah. I like the next two. So standardized design to reduce delayed and cost, including for modular homes, supportive innovative construction methods, and like mass timber. So essentially it looks like what's going to happen here is that the municipality is going to have approved designs and plans that you can use. And if you're willing to use these standardized designs, your time frame to build is going to get reduced quite a bit. I like it. Increase height restrictions in mass timber builds from 12 stories to 18 stories. We're seeing this happen a lot more. I know that this was initially restricted to six stories, and now it's gone to 12 and up to 18. I know that people fear, what's going to happen if there's a fire on the 18th floor and it's all timber. I don't know. I don't understand like the engineering side of it, but is it going to be cheaper for builders to build? Probably. Your take on that?
look, it's one of the various levers that we can pull, and it's one that we can pull quickly because we're in control of it. And
Yeah.
that's where I like this as well for progress. Like, the engineering side of things and the fire code itself will have to address the inherent risk in doing that. But
Yeah.
I'm sure that, like, well, I guess we shouldn't be sure about that, but we can expect that that will be done, right? They're not going to push this through without having that been a
Yeah.
consideration. So by pulling that lever, like that's one of the forces you can just immediately make change on and
Yeah.
have more units, which I'm always for that. Like, I think
Yeah.
that's good solutions.
Yeah. Yeah. And lastly, exempting public universities from the Planning Act to speed up the build of new student housing units. I think this was a big problem because there's some towns where there's 25 students living in a basement apartment just because there isn't enough places for them to live on campus, or it's just too expensive. So they like these universities to essentially go and build, whatever they can without going through the Planning Act and having backlogs. So I think it's a good sign, assuming that people want to get into the business of student housing.
Yep, that's definitely pretty interesting, right? Like more supply there will be useful, and they have bazillions of dollars anyways that can be
Yes.
spent, right? That alleviates some of that cost coming off of so many other people. So that's a good thing, I think.
Yeah. So again, this still needs to pass, but it is an act that they've put forward. Let's talk about the federal government, the famous Christian Freeland. So this actually came out today. 30-year amortization period on insured mortgages as of August 1. Sounds cool because it's going to be for first-time home buyers, but there's a fine print where it's only on new built homes, which means pre-construction. I personally don't love it because pre-construction market is taking a big beating right now. There's a lot of supply coming to the new construction business. So, if you're a first-time home buyer that's looking to get into the market, you need to understand the inherent risk of what's going on with pre-construction properties right now in terms of the valuation. But what they're saying is that it's supposed to assist with affordability because your amortization, you get 5 additional years of that amortization, and it gives the builders confidence to build because more people can afford these condominiums, and as a result, more people should be buying. So builders should go ahead and say, yes, we're confident that people are going to buy. Let's purchase more. I just don't like the fact that it's only on new built homes.
Yeah, I agree with you. I think that's kind of challenging, and it doesn't necessarily help. Like a lot of investors that will be watching this right now are going to be buying for the purpose of renting things out, which this will smooth cash flow, right? Anytime you increase amortization, it'll smooth your cash flow out. On the other hand, though, if it only applies to new builds, like there's not a ton of opportunity for value add. So you have to
Yes.
rely on those cash flowing opportunities. So it is interesting, but it's tough.
And newsflash, I don't know if any pre-construction project in the GTA cash flows,
No.
unless you have a 5% appreciation rate. I don't know, but hey, do your
thing, right?
Yeah.
Yeah, do your homework, please.
Do your homework. And lastly, RRSP withdrawals for first-time home buyers as of April 16th. So if you have an RRSP that you've been saving for, you can withdraw up to $60,000 from the previous $35,000. This does help, and you have, I believe, 5 additional years to pay it back. So this perhaps is a good way because I know that a lot of employers do match people's contributions, so that 60,000 can be in your account within 2-3 years. And if there's a way to use it towards your first year for your first home, then why not? I think this is in fact a great way, a great program that they've introduced.
Yeah, that's fantastic for sure.
All right, guys. And lastly, this is who I am, my experience, what we've been doing here in the Durham region. Take a read through it. And as always, if you have any questions, here's my phone number, my email. You can call me, you can text me. And as always, if you'd like to talk about your personal scenario, you can take out your phone, scan the QR code, and book a quick call with me, and we can jump on Zoom and talk about your personal scenario.
Awesome. Well, thank you so much, Saman. I really appreciate you coming on the channel today and giving us this up. Great to read through the news. I was really pleased as well to hear about what your actual office is offering. There's so much value there in your value proposition for what you guys are doing as a team and as the DR group. So yeah, I'd encourage anybody that is interested to reach out directly, scan that QR code and get after it. And don't forget, guys, to subscribe to this because we are back here every single month with these updates. And every month we've got new information, we've got new deals, we got new opportunities, and we've got a new market update, right? Because the numbers change every month. And so part of this is to alleviate your need to go and do all this research because Saman and his team's doing it already, right? We want you to be able to focus on your projects, focus on your actual acquisitions or dispositions, and don't worry about the numbers and stats. Come here and watch it. So we'll see you guys back here next month. And thanks again, Saman, for coming on.